the change in state of delivery, CISD, indicator in the ICT, style is offered for various platforms on the TradingFinder website. From this section, you can access the indicator on the TradingView site. Traders can also visit this page to learn how the indicator works. To access the indicator, on the TradingView site, search for the indicator name in the Indicators section and select the indicator. To run it on the chart. Also, for faster and easier access to this indicator, add it to your indicators by activating the Add to Favorites option. By applying the indicator on the chart, it starts searching for and identifying the CISD boundaries on the price chart. The CISD change in state of delivery indicator is a handy tool for identifying CISD and changing market trends, which is very suitable for ICT and smart traders and sends signals. It shows the structural break from bullish to bearish trends and from bearish to bullish to the traders. For example, in this section, a political signal has been sent to us. Here the price was moving upwards and a profitable trend was taking place. In this section, the price has formed an SFP or swing failure pattern by moving up and then returning down. With the price returning and breaking the CISD level, the CISD signal is generated for us, and after that we see that the price has started a downward trend in this area in the settings section. In the input section, there are options for us. In the first section, you can change the CISD settings. The settings for checking candles in the past are set to the number of 5 by default, and you can increase or decrease this value. This means that it checks 5 candles in the past and looks for the CISD level, which it identifies here and draws as a dotted line. It displays a label for traders, set CISD duration, initially 25 candles, adjustable. Select swing period, initially 50. Higher values identify longer swings. Lower values identify shorter swings. Choose past swing method. All or custom, default is all. With custom, choose past swings number, initially 100. It's set to 50, and the higher this value is, the longer term swings it identifies, while the lower this value is, the shorter term swings it identifies. In the next section, you can choose the swing identification method for the past, which has 2 options, all and custom. The default is set to all, but you can select the custom option. By selecting the custom option in the lower section, you can choose the number of swings to check in the past, which is initially set to 100. I will choose the all mode here. In the next section, you can enable or disable the display of all status bars. You can enable or disable the display or not display of policies. You can choose its color. You can choose the line color. In the next section, you can enable or disable the display or not display of the policy. Choose the color of its name along with the line color. And in the last section, you can enable or disable the display of all SFPs or swing failure patterns. In this section, you can enable or disable the display of swing failure patterns. Select its color along with its line color. You can enable or disable the display or not of the swing failure patterns of the lows, along with its name color and line color in this section, and then click the Confirm button. Well, Here for us, the swing filler pattern status is enabled and displayed along with the CIA. For example, in this section, a swing has formed for us, and with the price moving downwards, and its return to its own price range has formed an SFP or swing filler pattern, which indicates that liquidity has accumulated below this swing level and its support level, which has moved up again after the liquidity level has accumulated, and the CISD level has been broken upwards in this section, which is a breakout signal. For us, traders can use this signal to enter, buy trades, and after that, we see that the price has moved upwards. Well, friends, we've reached the end of this indicators tutorial. We would love to hear your comments and suggestions in the comments section.